Well, ladies and gentlemen, what an eventful last few days to say the least. Welcome back, gang. Yeah, we're back at the charts, back to the normal routine setup, back to the madness. Trump versus Elon, yet again. Tariff deadline extension, one big beautiful bill, Tesla sinking, stock market hasn't even reacted to what's going on. 4th of July celebrations, put everyone just relaxed, not bothered about anything. But now it's back to business. What can we expect? Well, it's going to be a bit of a quiet week this week in the marketplace in the sense of data. Don't really have anything to worry about until roughly around Wednesday when we've got the FOMC minutes. Let me just confirm that. Yep, Wednesday, we've got the FOMC minutes coming out. And what's that going to be telling us? We're going to get our rate cuts? I don't know, man. But in today's live stream, we're just going to break everything down. The market is yet to react to all the flurry of news that has come out. The big, beautiful bill, which is going to annihilate your dollar. It really is. It's great for anyone that has been paying a lot of tax. Now the taxes are going to get cut. Someone else has to absorb it. Now, that's going to be a bit of a problem for the dollar because it's only going to weaken. So you can appreciate that the euro is going to be doing very, very well. Stock market at all-time highs. Bitcoin only a couple of percentage away from its all-time high. Accumulation is massive right now on the ETF, and we're going to be diving into that because we're nearly close to 700,000 Bitcoin on the ETF. It's absolutely wild. But we're going to be talking about something. Credit. I got tagged in a post on X. And it's talking about how banks right now could be giving us the idea that there's a bit of a problem with liquidity. And every time that happens, well, the Fed needs to step in. Someone's got to start printing everything, haven't they? That's what this game is about. That's what fiat is all about. So once we get through all of that, guys, I'm going to give you a bit of a breakdown on what we can expect with Bitcoin. Of course, I haven't been doing that many lives, but we'll break it all down for you and give you a scope on what we can expect from Bitcoin today and, of course, the rest of the week, just so we can understand what's going to happen next. All right? So if you are new, welcome to the live stream, ladies and gentlemen. My name is Tino. Hit the like, subscribe. What's going on? No one said topless. I'm not interested in topless time. No, thank you. It's not a holiday, ladies and gentlemen. It's never a holiday. We're always doing something. If I have a holiday and no live streams, nothing, my days, I don't know what I'd do with myself. I'm actually not even, I might take a holiday. I don't know where. Let's get with the program, ladies and gentlemen. I mean, that was just pointless, but anyways. So, here we go. Stocks, they dipped, but they actually moved up just not a few moments ago, but they actually made a nice little run to the upside earlier on this morning. But there's a lot happening right now with regards to the stock market. Tesla in particular, I'm just going to address this right now. Tesla, there's this story about the Cybertruck not doing so well, okay? And the sales have been quite low, and Tesla is currently gapping down quite significantly at the open. So if we just go into Tesla's price action right now, you can see that Tesla is gapped down towards the $294 mark, but I'll tell you why investors are really not concerned about the Tesla Cybertruck sales, because that is just it's just a truck, okay? It's for those who want it and those who want to take advantage of it. The main Tesla car itself, that is Elon's avenue. That's where he's got to specialize. And of course, this one big beautiful bill has removed the electronic vehicle mandate that Elon is pretty cheesed off about. Because Trump's got a point. Why should everyone be forced to buy electronic cars? He said, let them buy their gasoline cars. What about hybrid cars? And he already chucked in there and said that is doing really well, to be fair. So I would strongly recommend that you guys go and check out hydrogen companies who are trying to make cars with the use of hydrogen. Trump, for some reason, has mentioned it in his post, which we'll talk about right now. Check this out. Over here, you've got this story with Trump and Elon. Where was my post? Here we go. Right here. So he starts talking about the one big beautiful bill, and he's addressing this discussion that he's had, or what Elon's trying to do with the third party. Elon's trying to now create this third party in retaliation to what's going on with this one big beautiful bill. Elon feels really strongly about it. He even commented below after Donald Trump typed all of this, and he said, I ain't reading all of that. I'm happy for you though, or sorry that happened. Okay, so you can see that that's already starting. But why is Tesla gapping down? Because Elon now is still showing that he's going to spend more attention battling it out with the president of the United States. That means he's not spending much time in his company, which is why Tesla's taken a little bit of a tumble to the downside. When you remember when he started to do the Doge and he was spending a lot of time there, investors weren't really particularly happy with that. Then when he said he was going to come back and spend more time in the company, investors pumped up Tesla. Now we're going back into the same story. Investors ain't going to be happy about the fact that Elon's now got this battle with Trump and having this back-to-back. It's absolutely wild. Like, who's going to beef the president? You can be the richest man in the world, but man, it's clear as day that Trump has just put him in his place. Now, with that being said, going into Trump, what did we say last week on our video? Investors had the expectation that Trump was going to backtrack on his idea of the tariffs. He's done it. He's extended it to the 1st of August. And of course, he's put out some new threats to the BRICS. It was one way or another that was going to happen. Okay, if you're anti-America and that puts you in the category of BRICS, then it's not going to be looking good for you. So this is what's going to be happening right now. Investors are now being pushed back to the idea of having to worry about tariffs. The deadline is on the 9th of July, and it looks like there's not that many deals coming through, even though they're saying that deals are coming through. It looks like that's not really happening, which can add a little bit of a cause for concern for investors. But then we look at investors and we say, hold on a second, are investors concerned about it? Clearly not, ladies and gentlemen. Investors don't care. Look at the stock market. The NASDAQ is trailing at its all-time highs near enough, and it's done very well. Well, I'd say it's done very well making this move to the upside. But the problem is there's no volume. I back that up with this story over here. Look, NASDAQ on its volume, on its all-time high claim, has not been present. That is an issue, which leads me to the next thing. I got tagged in this post by Jimmy the Patriot, courtesy of Finance a Lot. He says the following: something is happening in the banking system. The Fed's primary credit facility is about to cross zero, indicating there's a liquidity shortage in the financial system. He says last time this happened was 2022 when the markets rolled over, forcing the government to spend like a drunken sailor. All right, then, so let's just put it into perspective to help you understand. What is the credit? Well, it's when the banks lend out money. Okay, so you guys as consumers get that money and put it to work, and they just charge a markup. Check this chart out. This is the US spread, credit spread versus financial stocks. What you've got to pay attention to is this. When this blue line goes up, it's a problem, to simplify it. When the blue line goes up, it means credit's starting to get a little bit tighter. Financial stocks are going to feel the pain of that because there's less people receiving loans, credit, and there's less charges being made by the banks, so they can start marking up their profits and doing great for the shareholders. Okay? When the blue line goes up, it's a problem. When it comes down, it seems like there's a decent amount of liquidity and everything's all good. You can then start getting invested in financial stocks because they're only going to reap the benefit of the fact that the credit spread is coming down. We need it to come down. Just to simplify it, you can see that from that spike right there where there was a problem with liquidity. That was in 2020, and we all know what happened in 2020. That funny thing beginning with the letter C. Well, when that happened, there was a liquidity crisis. That's where the blue line spiked up. Equally, the stock market crashed. Then equally, as the credit started to come into play and the liquidity was pumped into the marketplace, the stock market rallied back up. Happy days, especially financial companies. It's like they received a reset. Look at this. This is the discount window, which is the primary credit facilities. Okay? When this starts to turn upwards, it can suggest that there is a bit of a problem, which is consistent with what this gentleman right here has said, Mr. Finance a Lot, where the primary credit facility starts to move up. Okay? By this chart, if we look at it, and when we look at it, we zoom in. Okay? It's starting to come up. Now, is that a real problem? No, I don't think it is a problem because we haven't had a spike. When we get the spike, it happens over a big event. When the event comes, there is an instant reaction. Equally, that reaction creates what? Urgency. Do something about it, Fed. Pump. To say it will be a progressive thing and that it's going to lead to a problem, nah, in my opinion, when it happens, it happens. The market will react straight away. And by the time you've reacted, you might have missed the boat. As you can see here on this one spike, that shot up, but it equally came straight back into play again. So what I'm saying is, I'm not saying that this right here is a problem or he's wrong. Not at all. It's an awareness because it could actually lead to a bigger problem. What's the bigger problem that we've got? Well, your one big beautiful bill is now going to add $3.4 trillion to the US deficit. Remember, every dollar that the US makes, it owes 126%. So you've already gotten to a great start right there. Let's now add another 3.4 trillion. It was made law. It's done now. That's naturally going to weaken the US dollar. That's now going to make investors start to reposition themselves in the marketplace. But what better time is there to reposition yourself until the one event that we're waiting for needs to happen? Fed pivot. My honest belief is this. Once the Fed pivot happens, that's when the market starts to turn and go bearish. That's the truth. Look at where you are. You're sustaining a bull market with no volume to the upside. Where is it, man? Where are the big boys buying? They're not present. There's rotation in the stock market. Small caps are outperforming the large caps. Growth stocks. Why would the small caps be outperforming the growth stocks? What do you do with the growth stock? You buy it and you hold it. Why? Because there's an expectation of growth. You're thinking, okay, maybe in the next year or so, we're going to see this company expand. I'm going to retain my positions and hold on to my stock. That naturally increases the value of the growth stock. But when you've got small caps doing really well, what does that mean? Well, it means these guys are looking for the equivalent of meme coins. They just want to do a quick flip. And that's what we've got right now. You've got the heavyweights not breaking out, with the exception of the world's most valuable stock company, Nvidia. Look at that. Absolutely stellar. And through all the madness, Nvidia is the stellar company, ladies and gentlemen. In my opinion, I'm going to say it, but I actually believe that Nvidia is the only stock out there that will outperform. It's going to outperform all of the Mag 7, in my opinion. It really is. And it's just going to keep on going up. Now, everybody knows ASML, they're the guys who make the chips and decide who makes the chips, who they make them for. But Nvidia is the leader. And if you want to understand people's sentiment about an industry or a sector, you look at Nvidia. At $159 a share with the stock split that happened a little while back at 10-1. This stock is going to go to easy market cap, $5 trillion, easily $500 a share. This is going to wipe the floor. That's my opinion. Is it subject to changes in policy? Of course it is. When you look at its actual statistics, it is subject to debt, but only 11% of it. So it's a company that is very cash rich. It doesn't hold too much debt. Plus 8,666 funds are playing this stock with an average volume of 200 million shares per day. This thing is absolutely wild. It's breaking out to the upside. And I'm saying it to you now that the stock market will turn once the Fed pivot comes into play. Back that logic up with the sentiment chart right here. In front of you is the smart money, dumb money. If you watch my last video where I was walking and I have the sun smacking me in the face and everybody was driving next to me, causing a ruckus while I'm trying to do this 8-minute video. In front of you, we are now heading into the extreme ranges. Those extreme ranges are shown with the blue line pointing downwards. I said in that video that we're currently trading around the 0.4 mark. We need to head to an extreme, which is around the 0.3. That is when we'll know that smart money has effectively sold as much as they physically could in terms of stock off the back of the idea that retail is optimistic. The red line is optimism amongst retail investors. That tells me what? Tells me people are buying these all-time highs out of fear. Fear and greed indexes are showing that everyone is on the other side of the green. Everyone's bull mode, bull mode. You got a Fed pivot coming, man. Do you understand what that means when the Fed pivot comes? Historically, it drops 51%, 31%, 28%. These are the corrections from all-time highs. Why? Because money gets given out when interest rates are cheap. They're borrowing and borrowing and borrowing. Then as money starts to get a little bit more expensive in the sense where the Fed pivots and starts to increase the interest rates, then all those guys need to start consolidating those positions and getting rid of them, which leads to the markets going up when interest rates are going higher. We're at 4.5%, ladies and gentlemen, and you've made all-time highs. You've got tariffs with deadlines and extensions coming into play, okay? You've also got this stubborn-ass federal board member, Mr. Jerome Powell, who won't budge until he sees the data giving him what he wants. We're in wait and see, as he said. Your labor market came out with a wild reading on Thursday, but everything is being primed to the idea that the market has priced in the Fed pivot. Now we're waiting for the next event after the pivot comes. And that is what the market is preparing itself for. Going into the charts themselves, ladies and gentlemen, go back into Bitcoin to understand where we are. Bitcoin has been doing a great job lately, and it's been performing very, very well. And last week, we absolutely killed it with the Platinum membership. So if you're not a Platinum member, this is the sort of thing that you would receive if you were. So going into, what day was it? Yeah, it was the 2nd of July. We had pretty much all the ranges covered. The euro, we expected it to move up, smash that. And then we had the same thing. Gold was a little bit reluctant to move up as aggressively, but NASDAQ, we wanted the 22,000. It just swept up and continued to go higher. We caught some great movement on the NASDAQ. So if you go to the 2nd of July and go look at those setups, you'll understand what I'm talking about. Bitcoin was absolutely wonderful. And this was a very difficult trade to take because we had the expectation that Bitcoin was going to retrace very slowly into this range here. We just bring that up for you to do the retrace to see the continuation to the upside, okay? And when you go into Bitcoin and look at that on the 2nd, you can see that that was an absolute wild move. Where was it? It was right here. Look at this. So the 2nd of July was right there. That was the zone, okay? So if I actually go back into that, it was on the 15-minute time frame. Green vector candles have swept the Asian session range. Go into it, 15-minute time frame, just to put it into perspective. You see what I'm talking about here. Look at that. We wanted to see the retrace back into that zone to then see the continuation higher. We caught all of that move. And if anyone continued to hold on to it, they would have seen some nice flavor with Bitcoin. Didn't quite take the all-time high, but in essence, they effectively took that range. And then we took it again on the next day, on the 3rd. We wanted to see that Bitcoin from that move to the upside right there. We wanted to see the retrace into Asia to then see the sweep of the 110,544. We ended up seeing that move the next day right there, which was a nice reversal, straight back up, clearing that range. So it was a really good week last week. And then over the weekend, I shared this other projection on Bitcoin to move up over the weekend during the psychological ranges. So this was just for Bitcoin, Ethereum, and Solana. And all three came through. We didn't quite get the actual big move I wanted, but Bitcoin made the move up, retraced, and then smacked it out to the upside. So that was a nice little play over the weekends. If you want to get access to those setups, guys, I do those setups every single day, Monday through to Saturday with the weekly review. I do throw projections on Bitcoin over the weekend. Pinned to the top of the chat is the access for that, ladies and gentlemen. Now, let's go into what is actually going on across the board. So with Bitcoin, let's just refresh this. What time are we on? Okay, market opens in 10 minutes. Now, higher time frame traders, or should I say holders of Bitcoin, what do you need to know? As it stands right now, Bitcoin is doing very well to hold above this 50 EMA on the daily time frame. This is important. Equally, we go over to the Arkham, you can see 696,274 for the Bitcoin ETF. And I've been getting this question asked to me all the time as to whether or not Bitcoin is Bitcoin dominance going to come down as the altcoin season going to start coming into play? How many of you are asking that question? Is Bitcoin dominance going to come down so that you can effectively get your money's worth on your altcoins? Well, let's just put it into perspective over here. Right now, the Bitcoin dominance sits at, where are we at? 65% Bitcoin dominance, okay? And the thing is with the dominance itself is I've got the projection right there, and I'm expecting 70% range, between 70 and 72% Bitcoin dominance. I'm expecting that, okay? Now, that might not be good for any of you when it comes to your altcoins, but you've got to look at it like this. When you've got the Fed pivot coming into play, that is the point when Bitcoin fundamentally should actually outperform the market and do well. It has to. Because the idea is that when the Fed pivots, is a change in in monetary policy, naturally investors are going to be taking themselves out of other positions and start going into other exposure of assets because money is cheap. Bitcoin for me, is preparing for that, in my opinion. I think it's actually preparing for that logic. When we go into the actual ETF itself, 696,000, this thing is going to go to 1 million pretty soon. Okay. That is equally going to end up sending Bitcoin dominance even further up. And I've said this before, that altcoins themselves are only going to see the benefit of a season is if everything starts to go up. And the problem that we've got is this. We haven't had, in my opinion, a strong bull market. It's expansion, contraction. When you go back and look at this and you look at the actual volume of the stock market when it's making its all-time highs, you really need to see the strength in the move. Equally, we'll get a nice move up on the all-time high for the NASDAQ, and then it will come back down and prepare us for the next bull run, okay? So even though your altcoins might get smacked when Bitcoin hits the 70%, I believe that when everything is moving up, so will the altcoins. But I certainly don't believe that anyone in the ETF will sell their ETF for Bitcoin ETF and then go into altcoins. That's not a stab at altcoins. It's just the people that are playing the cryptocurrency game with bigger cash are Wall Street. They're not going to do that. They're not going to sell their Bitcoin to go into an altcoin. Maybe Ethereum at most. But any ETF-related cryptocurrency like Solana, like Ethereum, like Bitcoin, that is the hemisphere that Wall Street will focus on. But primarily, it's all about Bitcoin. Now, from a price action perspective, in front of you, you've got Bitcoin just flirting with this all-time high. The actual consolidation for Bitcoin in this range right here is very important because it's spending a small amount of time consolidating, which means that when it does decide to break away from this point, it can equally come back into it. Why? Because they haven't spent that much time consolidating in that range. When we go and have a look at the order flow for Bitcoin, you can see right here that you've got a very light amount of liquidity. Look, it's very light across the board. It's spaced out. It's not clustered. It's not showing me that everyone is eager to buy or sell. Remember, you've got orders down here with $32 million order for 107,500 on Bitcoin. So it's not really that much, but you can see the book is very, very light across the board. That means investors are still waiting for things. And we go over to other assets like gold. You can say to yourself, well, where are investors' heads at with gold right now? Well, gold is starting to roll over ever so slightly. But if we get any insight into what's going on with the FOMC minutes, that's going to let us know if investors are going to price in the idea of a rate cut. Because remember, gold goes up when the interest rates come down. Okay? But also, what I said earlier on about this credit window stuff, that is another reason for gold to go up as well. Because companies that are financial companies, they're going to have to hedge themselves on the drawdown of what's going on with tightness of credit because people aren't spending money and obtaining credit to put to work. So equally, gold will then force hedge investors to say, you know what, we better get into this. Okay. So if the interest rates are going to get cut, equally, banks are going to be charging less for their financial products. So that's equally going to be shown in terms of their share price. They're not going to be earning as much. But on the flip side to that, it's going to start consumers spending money again, which means that they're over a period of time, if the trajectory for interest rates is going to come down, they know that at some point they're going to be earning at nice, decent levels again in the future. Whilst that's all happening, they'll go into gold to hedge themselves. Okay. Gold has spent a long time consolidating up here because investors are accumulating, waiting for the next event. And I do believe that the Fed pivot will trigger gold to go higher. Goldman Sachs has an expectation of a $4,500 per ounce on gold. So that's something that this could be preparing for. And equally, when you see the consolidation period of gold, it does rally up quite significantly. So we're looking at the same thing right here. Now, going back into Bitcoin, just to put it into perspective for you all. This is the daily time frame. And I've said this before. As long as Bitcoin stays above the 5 and 13 EMA, which is these two moving averages right here, then things are quite good. But look at how close price is to the moving averages. Tells you that there is effectively a compression in momentum. When the 50 EMA is relatively close to the 5 and 13 EMA, it's telling you that things are compressing and there's not that much movement. It's just consolidating, going sideways. Now, a lot of people are drawing out lots of fun games. Like, for example, they're doing this and waiting for Bitcoin to break out. So if you drew the line right there, okay, on the idea that Bitcoin was going to break out, you would have then seen the breakout, but then it would have come back in again. If you then decided to draw the line from here, okay? Or maybe from here, you'll be waiting for Bitcoin to break out, which means it could easily break up to come back in again. The week is not filled with too much data, but unemployment claims, I don't think that investors are caring about that right now. I think they're caring about the tariffs and, of course, the impact that the market's going to have in relation to this one big, beautiful bill. It sounds like a beautiful bill, but it's no good for the stock market. But it will be great for Bitcoin. Why? Because the value of the dollar is going to get suppressed, which means Bitcoin, in principle, should be going up further. Okay? From a weekly perspective, for the guys who are playing the game a little bit over a higher time frame, that weekly candle's a bit of a problem for me. And the only reason being is because it hasn't been able to succeed this previous range right here. It's barely managed to get above this previous week here when we hit the 108,757 zone. But this weekly candle has to show its worth because that wick down there is a problem. It looks like it's a rejection, which actually what it is a sweep of the bids to come back up. But the problem we've got is, have they swept the bids and sold as it made the move higher? Because that candlestick close is not strong. So we really need to see Bitcoin making the move. But when you look at it, the Arkham is there showing you consistency of interest in the ETF. Like I said before, Bitcoin might be getting shorted on the futures and they may be going into the ETF. Look at the ETF, man. It's wonderful. Look at that. We've got a price projection of around $100 on the ETF for Bitcoin. We wanted 60. We got 60 from the initial public offering itself. I'm looking at $100 on the ETF. And if the ETF gets to a decent figure, let's hypothetically assume it gets to about $250, then that's going to be worth its weight, believe me. Let me just go and give you the statistics on the Bitcoin ETF a second. Hold on. IBIT. Here we go. This is the iShares Bitcoin Trust. Right. So on average, its volume is 43 million. That's a heavyweight. That is 43 million shares, 76 billion market cap. That is wonderful. And look at that. There's more consistency of accumulation on there. Looking at the funds, we've had a reduction in fund ownership. This is why I'm saying you've got to be very careful because Wall Street is the one that's making the moves in crypto. You had funds ownership from the start, which was at 86. It went all the way to a high of 120, and now it's come back in June 25 quarter with 116. So we're seeing a little bit of a reduction in fund ownership. So that's something that you've got to really pay attention to when it comes to paying and looking as to whether or not you get invested in ETFs. Now, market is open, ladies and gentlemen. Let's just put things into perspective and have a look at where we are. Bitcoin, not really doing too much a second. Hold on, let me just look at that. Where are we at? Let's go into the 1 hour time frame, reset that. Okay, so we've seen a nice little reversal right there. I've got exo charts right now in front of me. Whoa, whoa, whoa. What's it doing? Whoa, where's it gone? Wow, where's it gone? I've lost it. Never mind. Never mind. Okay, so anyways, here we go. Got this here. So this is the 4 hour time frame on NASDAQ, and you can see that we've got just pretty much sideways price action holding around the VWAP. You've got to remember that NASDAQ is going to be reacting to all the news that has come out. When we look at the price action of NASDAQ itself, that's going to help us understand where we are. So look, sideways. Today, the volume has to be strong. Let me just quickly pull up NASDAQ for you over here. And we just go into the 10-minute time frame just to understand. So we've seen a nice bit of volume coming into play. Hold on, it hasn't fully done it just yet. Just bring the 5-minute chart. Here we go. So there we go. So now it's populated. So we've seen volume is high right now, 2,422%, but that's just because the market has opened. And when they say when you should trade the opens, that's what you're up against. You're up against big spikes in volume, which can send the market in either direction. So breakout traders, you'll obviously end up seeing the benefit of that when you're playing opening range breakouts. But be very careful because the NASDAQ is processing all this information that's come out from this Tesla story, from Trump and his extension with the deadline. You've also got this little BS movement that's going on right now between Donald Trump and Elon itself. So just remember, stocks are going to price in everything. Going into Tesla just for a quick second right there, down 8%, but that looks like we could get a nice little gap filling right there once investors had processed what's going on. If Elon's going to be spending more time on this third party, then Tesla's only going to keep on going down. Nvidia has done very well at the open, to be fair. It's only down 0.26. If Tesla's trading down so negatively, that can have an impact on the S&P itself as well. So just take that into consideration. Going into oil, you can see oil is making a move up. When oil's moving up, that could be a bit of a problem where investors are like, you know what? We don't like the look of what's going on. So oil's price might start to make a move higher. But pay close attention to the value of your dollar. Your dollar is trying to move up and it's trading away from these significant lows. This could be the low for the dollar. But ultimately, the one big beautiful bill, even though it's something that's going to happen over the next 10 years, it's not going to have an impact straight away, but the market will react to it. So naturally, tax cuts are going to increase the deficit. That is going to increase the demand that investors are going to seek for holding on to US bonds. And if they want a higher rates of return, that means the 2-year and the 10-year and the 5-year are going to equally go up higher. That's going to have an impact on the stock market overall, which would then send the NASDAQ to come down. And then, of course, it's not been rising on high volume. So the spikes on NASDAQ, it can shoot up and come down. But when it does start to roll over, that's when you're going to start seeing the heavy volume on the distribution side, because we've been getting all-time highs and the volume hasn't been present, ladies and gentlemen. Okay, cool. Any questions other than that, ladies and gentlemen? Well, if not, XRP is a stable coin. That's just making me want to end the live. With that being said, ladies and gentlemen, mad love and respect. Hit the like button, subscribe, and I will be tuning into you all later on. Peace.